We have a great show prepared for you today on Unbound Radio. I'm your host, Sean from SGTreport, the corporate propaganda antidote. And on the line today, not only do we have our good friend Rory, a contributor over at SGTreport. Welcome, Rory.
Thank you.
We also have the one and only, the incredible Rob Kirby from Kirby Analytics. Rob, welcome.
Thanks, Sean. I'm blushing.
The Jim Willies and the ranting Andy Hoffmans of the world, you guys are truth tellers. The Salentes, you rarely edit what you're going to say. You're rarely politically correct. You shoot straight, and that's how people know they can trust you. And you also are one of the outspoken folks about 9/11 being a false flag operation, which has always been a benchmark and a litmus test for me in terms of identifying real truth tellers. It's really great to have you today, Rob, so welcome.
Thanks. And nice to make your acquaintance too, Rory.
Well, thank you. Same here.
Now, Rob, I know that Rory has a lot of questions for you. We have a really interesting show lined up. And I don't know if you guys can hear that crazy little sound. Are you guys hearing that sound? It sounds like one of the slaves in a Rothschild dungeon, trying to escape. Can you hear that?
Yeah, it's very thematic given the topics we're going to be discussing, Sean.
Yeah, you'd think it's a sound effect I added, but no, that is the Rothschilds, and somebody's trying to send us a message. I think we need to send one of Eric Holder's crack SWAT teams over to say, oh wait, no, he's not on our side either, is he?
You mean crack smoking?
Don't be throwing comments around about crack smoking. I live in Toronto, and if you know anything about allegations regarding our mayor lately, you don't want to be throwing stuff like that around in Toronto.
Yeah, that's a crazy story. You might end up dead, right?
I sure hope not.
I'll have to research that, but I digress. So we're here with Rob Kirby from Kirby Analytics, and we have 13 minutes. Just help people understand where you were after pre-bond, and I know that you maybe rubbed elbows with some of those folks over at Cantor Fitzgerald, and about as much as I know about those folks is that hundreds of them, unfortunately, ended up dead on 9/11.
Yeah, I spent 11 years at an institutional brokerage called Pre-Bond, and Pre-Bond is now called Tullett Pre-Bond. And after working 11 years there, I spent 2 years at a firm, a Canadian bond brokerage firm called Freedom Bond Brokers. And Freedom Bond Brokers was subsequently, after I left there, bought out by another company called Cantor Fitzgerald. And after a couple of years there, I spent my last 2 years in the institutional universe working for a company called Garban. And Garban is the second biggest broker of U.S. government securities next to Cantor Fitzgerald. And they had a Canadian office at the time. And when I stopped working there, it was because they were pretty much winding the operation, their operation in Canada down. And from there, I was out of the market for a couple of years, and then I was involved in retail for 4 years. So I've seen the financial services industry from the institutional brokerage side, and I've worked the gamut of product pretty much from foreign exchange through money market and through to the bond markets. And it was not till I really made it to the retail side of the financial services industry that I learned how much hatred there was in the financial universe for precious metals.
Hatred indeed. It's the bane of the existence of the central banks, and the last thing they want is for the common man to understand how manipulated his currency has been. Getting back to Cantor Fitzgerald just briefly, and boy, we don't have to go down this rabbit hole if you don't want to, but 658 employees of Cantor were killed in the 9/11 attacks. And the one person who was not there that day and who did not perish was CEO Howard Lutnick. Given all of the anomalies and high strangeness associated with 9/11, Jim Willie has talked about trillions in bond theft. There were gold thefts coming out of those towers in the basements that morning. Do you have any sense of what Cantor Fitzgerald's involvement was in what we now know is the manipulation of the precious metals markets, of bonds, all in this effort to support the world's reserve currency?
Well, what my research over the years has told me, Sean, is that the day of 9/11, I know that there was a major tranche of 10-year gold-backed bonds that were due to mature, and basically the records, whether those bonds were ever redeemed, whether they earned good value, I don't think anybody in the world really knows, except for the people that would have been involved in the transaction. All I can tell you is that on the day of 9/11, there were a lot of unusual transactions that people got sniff of, and people need to also, or should appreciate the volume of bonds that get traded through a firm like Cantor Fitzgerald in a day, because it's literally trillions of dollars worth of bonds that get settled in their network electronically every day. And like on the day of 9/11, instead of things being checked out the way they normally would be checked out, as in terms that payments were made against collateral surrendered, a lot of normal procedure went out the window, and basically the Fed, acting in a manner in which they could say that they were helping to prop up the financial system, they let a whole lot of stuff clear that otherwise would have had way more scrutiny and would have been examined. So we had very unusual situation in the clearing of massive amounts of securities for a couple days, and there's no doubt in my mind that Cantor Fitzgerald, occupying the top 5 floors of, I believe it was the North Tower, there's no doubt in my mind that if you have a conspiracy bent, you got to figure that Cantor Fitzgerald, or the taking down of Cantor Fitzgerald and their systems, and getting rid of it's the paper trail, it's the electronic audit trail. All that stuff got destroyed, we don't know that all of it, because they had some backup. But anyway, what might have been buried in the rubble of Cantor Fitzgerald's data system is, it's almost unfathomable to think.
Right.
And especially when you consider that the day before 9/11, Defense Secretary Rumsfeld came public and said that the Pentagon was basically at $2.3 trillion worth of expenditures that they had no bills for.
That's right. They couldn't account for $2.3 trillion. You know, what I like to say is that it's not that they couldn't track it, Rob. It's that they won't tell us what they did with it. And I'll tell you what, for people that want to dig in a little further into the 9/11 anomalies as it relates to companies like Cantor Fitzgerald, AIG, Marsh & McClellan, the world's largest brokerage house, take a look at tragedyandhope.com, Richard Grove's excellent site. Richard Grove was supposed to be in a meeting that morning at 9 a.m., and only because he was running late and didn't make it on time did he survive to tell his story. And I'll tell you what, there's few researchers that I have followed, read the work of, that have outlined in detail the absolute criminality of the drugs, the money laundering, the terror funding coming out of the corporations that were located in those towers on that day. Nobody's done a better job, in my opinion, than Richard Grove. And certainly there are other researchers like David Ray Griffin, Dr. Stephen Jones, and others that have moved mountains. But nobody has done the work regarding the financial malfeasance that Richard Grove has done. So I digress. Rory, why don't we take the next 5 or 6 minutes we have before we go to break? I guess we have 5 minutes. And let you lead off with a topic or two, maybe a story or a question that you want to throw out at Rob in regards to the precious metals manipulation and the price action we've been seeing. Rory? Oh, I think we lost him. Rob, are you there?
Yeah, I'm here.
Okay.
I'm still here.
All right. Well, let me ask you this. I know that before we go to break, we'll get Rory back on here in a second. I wanted to ask you about the supply constraints that we're seeing in Singapore. We're seeing it maybe in India as well in terms of gold supply. Goldcore has a article out called Gold Bar Supply Constraints in Singapore. See record premiums. My understanding is there's plenty of gold up in Toronto. I know that I can get some gold from APMEX or Miles Franklin or whoever. What's your take on these quote-unquote supply constraints?
Well, whether or not is a supply constraint in precious metal, I think is largely dependent on which jurisdiction you're in, Sean. To begin with, Asian and I'm going to even go as far to say Europeans and Asians have a different view towards precious metal, in that they really do view them as being precious. And when I say that, it's sort of a comparative way of viewing all things precious, because you see Asian and African countries and European countries have had firsthand experiences with something in economics known as the hyperinflation. And basically these people or their immediate heirs have had firsthand experience of paper currency becoming worthless. And when you have that in your culture or in your cultural roots, you're going to have a different respect or a different understanding of what precious really is when paper money fails. And in North America, we really haven't so much had the experience, at least not in the last 100 years, because in the past 100 years, for the most part, America, like prior to 1971, America was on a gold standard, and the world was on a gold standard. And the value of precious metal was respected. So basically, money always, for the most part, has held its value, reasonably well has held its value. As in, like, we haven't had an experience where it takes a wheelbarrow full of paper money to buy a loaf of bread, sort of thing. Like
right.
What they're going through in Zimbabwe, what the Germans went through in Weimar, what Yugoslavia's gone through, what a lot of countries in South America have gone through. Mm-hmm. You see, and even Mexico's gone through it. But Canada, the United States, we haven't had an episode quite like that, and therefore physical metal tends to be a little more readily obtainable here because it hasn't caught on with the masses yet, the way it has in the past in other jurisdictions.
That's right. I always like to say when people weigh in comments and do YouTube videos saying, give me a break. There is no shortage of precious metal. You can get it whenever you want it. And I always like to remind people that, yeah, that's true, but that's only because such a minuscule percentage of the American public is awake. Because in the case of a Target, which has over 2,000 stores, or a Walmart, which has over 5,000 stores, there is only one APMEX. There is only one Gainesville.com. There is only one Miles Franklin. And so it would be very easy for a run on metals to occur at those very small businesses with very small vaults of not a lot of precious metal. We have 40 seconds before we go to break here. Rory, are you back?
I'm back. I'm sorry about that.
Hey, welcome back, Rory. I threw you an opportunity to ask Rob a question, and then all we heard was silence. We thought you were mad at us.
No, unfortunately, my connection jumped out. So
no worries. Glad to have you back. Rob, are you there?
Yeah, I'm still here.
All right. Well, thanks for hanging with us, Rob. In this segment, we have 5 minutes, and I want to lead off by talking to you about what we're seeing in the COT report, because TFS Metals has a report out today talking about the fact that the banks, the criminal cartel, appears to be covering with a reduction of just over 75% of their shorts compared to the most recent high short position. And I'm kind of babbling here. Did you get a chance to take a look at the COT report at all? And just what's your overall take on the fact that the cartel appears to be covering and maybe getting into position to let the precious metals prices soar?
Well, my view, to be honest with you, my view on the COT reports, they're basically all the data that's contained in the COT reports is produced by the CME, which is the owner of the exchange that owns COMEX, that owns NYMEX, and they're a private company. And being a private company, and I would argue being a company that would certainly be regarded by people in the financial universe as being an essential or a critical company to U.S. national security, I would remind people that there is a law standing on the books whereby the President of the United States Intelligence Czar has the rights to, if a public company is deemed to be of national security interest, they have the right to grant a waiver where a company does not have to publish true and accurate state of its financial condition. And therefore, I think that casts in a very dubious eye the data that's presented by the COTs. You see, I don't trust the COT report. I don't trust the CFTC. I think the CFTC is aiding and abetting and is part of the problem in the price suppression of metals. They've been running cover for the U.S. Treasury. You see, the problem is, Sean, the prices of precious metal are being suppressed by the U.S. government. And the CFTC is a branch of the U.S. government. And as the U.S. government has the ability to grant waivers to companies if they're deemed to be in the interest of national security, we can't really trust anything that's coming from the U.S. government regarding financial anything, because they're the biggest debtor in the world. They're issuing more bonds than anyone else in the world. There is no flight to quality because U.S. government debt isn't quality. And the reason we know it isn't quality is because the rest of the world isn't buying the debt that the U.S. is auctioning. It's all being bought by the Fed.
Right.
So what I'm saying is there is no price discovery. We don't have price discovery in precious metals, not true price discovery. It's all hallucination. Just like interest rates for American debt at 0 or at 1 or at 2. I mean, people will say, well, what do you mean? 10-year bonds have backed up from 165 to 210 in the last month. Listen, 10-year U.S. government debt should be trading north of 10%. And it's at 210. It's ridiculous.
Well, and can you help people understand that when we talk about J.P. Morgan this, J.P. Morgan that, Blythe Masters this, Jamie Dimon is, the heart of evil. Let's just talk about the fact that...
I can make it very simple. J.P. Morgan has a $72 trillion derivatives book. No bank by any regulator worth their salt would be allowed to have a $72 trillion book. And what you can conclude from that, it isn't J.P. Morgan's book at all. They are the positions of the U.S. Treasury. That's why regulators haven't shut them down. Because I'll tell you, Sean, as a rational, if you know the first thing about finance, if you know the first thing about banking, if you know the first thing about risk, if you know the first thing about what the components are that make up these derivatives positions, and the nonsensical idiocracy of people to say that it's all hedged. There's nothing to hedge a $72 trillion position against.
Right. I'm sorry to interrupt. $72 trillion position is the government. It's not J.P. Morgan. I'm so thrilled to have on the line Rob Kirby from Kirby Analytics. And Rory, are you back?
I am back.
Oh, my God, Rory. We've lost you about 17 times, but I'm glad to have you back because as soon as I'm done framing this question and statement up for Rob and getting his response, I want you to jump in with whatever you'd like to cover. So, Rob, you've clearly established that you don't trust the CFTC or the COT report, and neither do any of us, really. We certainly can't trust this criminal government, Eric Holder and the Justice Department included. But let me just read to you this quote from TF Metals. Turd writes, and I quote, "All of the price action since September 13th, 2012 has been designed to alleviate the gigantic financial risk and potential liability of being short paper metal by smashing price against fundamentals from 1800 to 1350 and 35 to 22 in silver. The cartel banks accomplished two things. Number one, they transferred the vast majority of their potential liability from themselves to the spec sector, hedge funds, etc. And number two, they put themselves in a position to profit from the inevitable price explosion." Do you agree with that on any level? Because the numbers would suggest that the cartel is trying to extricate themselves from an undesirable position in shorts.
I think the notion that the cartel can extricate themselves from their short positions is wishful thinking. That's what gives me, more than anything, what gives me reason to not believe the COT numbers. I don't believe that the cartel can get out of their short position. because I think if they were ever seen to be buying or covering, the market would absolutely instantly go bananas, literally bananas up. And that hasn't happened. That's why I think it casts a huge, huge shadow of doubt over the validity of the COT numbers that were being shown. I don't believe them, because you see, anecdotally, what we're seeing in the physical markets, like basically all over Asia and in a good part of Europe. If you wanted metal like 2 months ago, you could buy it like for basically same day, next day, 2 days delivery. Now delivery times at all the smelters has been blown out to 6 weeks, 8 weeks for new stock, and we've got anecdotal reports of people paying up to $500 an ounce premium for coin product in Japan, premiums in India, premiums all in other points in Asia for physical metal have all ballooned, and you see, and so it's not one thing on its own; it's all things taken together cast major doubts on my view. The only people that have really been sold down the river in this bash of the price are people that pay attention to charts, and I'm going to harken back to the 2-day movement, Friday, April 12th, Monday, April 15th. Those 2 days taken together, the movement and the price of gold as a data set, it was 8.5 standard deviation move, and mathematically, that's something that does not happen.
Right.
Not in natural or free markets. Does not happen, because you know what? Mathematics only goes up to 7 standard deviations in being able to calculate ability. And at 7 standard deviations, you're talking about the likelihood of our sun burning out.
Yeah, statistically impossible. And you and I spoke about that. We talked about that in our last interview. To the same degree that it's statistically impossible that I think what was the Dow was going up 17 Tuesdays in a row or whatever. And that was, it's never been seen before. We're seeing all sorts of statistical anomalies, and that's because this is not a free market. Now, Rory, I know you've done a lot of show prep. I'm going to get out of the way. Why don't you take the floor for the next 10 minutes, and you and Rob can have a conversation about whatever you'd like. I'll jump in if necessary, and I do want to circle back at some point, and I want to get Rob's opinion on Japan, because what's going on there is very scary in my opinion, and I also want to get his opinion on that World Bank whistleblower. But Rory, the floor is yours.
Well, I've got some fundamentals that I would like to go over.
Great.
And you and I, Sean, had discussed a couple of weeks ago the mining cost in South Africa, and 3 out of the 5 largest gold mine operations in South Africa were operating at a loss at that time, and they still are. Silver production in the U.S. it's going to drop 15 to 17% due to the Kennecott mine collapse. According to the United States Geological Society, the USGS, since 1997, ore grades have fallen 38% for underground gold mines and 35% for open pit gold mines. And in 1993, $1.2 billion was spent on exploration. It netted 55 million ounces of gold. In 2010, $5.7 billion were spent on exploration and netted 20 million ounces of gold.
Well, the statistics that Rory is citing contradict the narrative that we're being given in the mainstream financial press.
Exactly.
See, and this is a theme, because we've been given a lot of false narratives on a lot of things coming out of officialdom. Particularly, I'm going to say, particularly in your country, particularly by the Obama administration, but not to make it partisan. This has been a continuation of false narrative that was also given out by the Bush administration before Obama ever came to power. We're given a narrative. We're given a narrative in the mainstream financial press that nobody wants gold. I get it on the Canadian Business News every day, all day, every day during this price drop. You see, and all they're reporting on is the price on the COMEX, but they failed to mention that wait times for metal at smelters and at mints is increasing. They failed to mention the premiums being paid in different parts of the world, which are almost starting to make the posted price sound irrelevant, because you can't buy metal at those prices. And you see, but what they like to do is they like to create a narrative. And the other thing they like to do, talking about creating a false narrative, though it's amazing on the business network in Canada, because I mean, when I work at my desk, I have it on, during the day, because I keep track of who they're talking to and the topics that are in the news. And they'll say that it's amazing how they'll say 1 minute there's no inflation, and that's why rates are at 2% or lower, and short rates are at 0, because there's no inflation and they don't expect any for the next 5 years. And then in the next segment, they'll bring on a mining company executive, and they'll say your results are horrible because you're facing increased costs. See, you can't be both.
Yeah.
See, you can't be no inflation, but you can't make money mining with gold at $1,400 an ounce because you're suffering from increased costs.
Right. Well,
increased costs are inflation.
Well, there is no inflation though, Rob. You know that if you take out food and energy and oil and gas and, any commodities, I mean, there's no inflation. As long as we're dealing with televisions being shipped in from foreign countries, I mean, we're seeing deflation.
Sean, it's become so unbelievable. Barrick Gold, I believe it was in January, put out a report, and Barrick themselves said that the marginal cost of a new unit of a new ounce of gold for Barrick, I'm pretty sure they said it was $1,400.
Wow.
That's their cost.
Wow.
That's if you count all the capital costs, all the exploration and development that goes in to bringing a new ounce of reserves onto their, into their portfolio. They put it out and they said $1,400. So $1,400 is now break even for any new mining.
Well,
$1,400.
Check this out real quick. We interviewed Jorge Lapendia, basically a whistleblower about the Pascua-Lama project. We were ahead of the curve on that story because now Barrick is out of that game for at least 2 years, probably forever, because he said they don't have rights to the property. Well, they've lost it. They've lost their ability to pull any gold out of the ground there at Pascua-Lama, and they're probably including that in their reserves.
No, they weren't including that. So what I'm saying is because that utterance from Barrick about negative news about Pascua-Lama came at least a couple months after they put that piece out in January, talking about the cost of a marginal new ounce of gold for them. So that means that it's probably something well in excess of $1,400 currently an ounce for a new ounce for Barrick to produce.
Wow.
Well, and Barrick, they were just fined on the Pascua-Lama gold project. They're out for at least 1 to 2 years. This was reported, we put this yesterday, and it's from Reuters. And the Barrick's Pascua-Lama gold project frozen for at least 1 to 2 years, and this is according to a Chilean regulator.
Yeah. I'm sorry. I was going to say, yeah. And look at Kennecott, right? Do you think Kennecott's going to be down for 1 to 2 years or forever? I mean, the fact is that the other false narrative that we see, guys, we're going to break here in 2 minutes and 30 seconds. If you can watch your clocks, I'll be brief. Rob, the other false narrative that I get a kick out of is the price narrative, which is this: 55 ounces of silver for 1 ounce of gold. While we all know that when they mine the stuff, they're only finding 9 ounces of silver for every 1 ounce of gold.
Exactly. That is a farce. But the other thing, if you want to talk in terms of false narrative, there are so many who have negative and disparaging things to say about precious metal. And the people that I'm referring to here again are the Christians, the Gartmans, the Nadlers, these fools who talk in terms of with gold at $1,400, people can make a good profit on gold and how much do you think they deserve to make in terms of a return? From there, I want to just say to them, how much do you think it costs Bill Gates to produce an incremental unit of Windows 8? Maybe 10 cents? And what does he sell it for?
Exactly.
$500 a copy, maybe? What kind of a markup is he making? If you're going to say that miners aren't entitled to make a return like that, you should have a problem with Bill Gates making money too, shouldn't you?
Yeah. Well, we live in a world of illusion, and what I love about those guys like Jeff Christian over at, what is he with, CME Group?
CPM.
CPM, yeah, thank you. He, they're the most unnoble company out there, in my opinion. Anything coming out of that?
Jeffrey Christian is a repulsive human being. And I can't say in public what I really think of him because it would be edited out.
Well, as I've reported time and time again, Jeffrey Christian really helped us all out by reminding us in that CFTC hearing in 2010, well, sure, there is there's a restricted gold supply, a physical gold supply, but in the way the market deems it, in the way the market sees it, the paper market, there's 100 times what there is. His actual words, there's 100 times what there is. So we all know that the paper market is nothing but smoke and mirrors, and that's why we tell people to stack physical. Buy precious metals in physical form while you can. My profound thanks to Rob Kirby from Kirby Analytics for taking time out of his schedule to join us. We have 6 minutes left in the show. I wanted to ask Rob a question about Japan. Will Japan's nightmarish currency and bond situation lead to a global house of cards collapse? But before he runs with that, if he has time, Rory, what would you have for Rob Kirby before we lose him?
Well, I've got a question regarding the fundamentals, and do they even matter at this point? Given the last bit of conversation that we had and all the statistics that I just threw out there, do they even matter as far as how the commodities, all commodities, are priced at this point?
You know what, Rory? I'm going to say I don't think fundamentals really do matter much up to a point. Price rigging, what has enabled the price rigging is the global derivatives complex, which is all denominated in U.S. dollars. And what the global derivatives complex is a price control grid, and it gives the powers that be control through its key players, through the 5 major banks in America that have derivatives books over $50 trillion in size each. They control the cost of capital through interest rates. They control strategic commodities, the price of, as in the price of crude oil, the price of natural gas, and so let's just say energy, and maybe to a lesser and maybe to a greater extent the price of food. The Achilles heel of these people in arbitrarily setting prices. This is called central planning. And if you know anything about your history books about how successful central planning is long term, you can look at the failure of the former Soviet Union. Central planning regimes don't have a good track record in our world. And that's what we're living under right now. And the key to breaking their control is the physical precious metals market, because physical precious metal is one thing they can't create out of thin air. So, if to bring it back sort of full circle to what you just asked me, fundamentally, you would think that gold miners would be a good investment. But that fundamental thought won't hold true until we break the grip that the price riggers have on the price. And the way you're going to break that is by buying physical ounces.
Now, let me ask you, central planning has worked beautifully in Japan, Rob. We literally are going to lose you in 3 minutes. The show's over. What are your thoughts on what we're seeing in Japan with its very scary currency situation and the bond market?
Central planning has not worked very well in Japan.
I know, that was my attempt at sarcasm.
Central planning is going to bring the undoing, is creating the undoing of Japan. And Japan is, in my view, is a bomb, and the fuse has already been lit. And I don't know how long the fuse is, but you know what? You can't print money the way Japan is, just like you can't print money the way the Fed is, and get away with it indefinitely.
Well, it seems to me that the global house of cards is very much in danger of collapsing because of what's going on in Japan. And we've been looking for that for a very long time. What will cause the global Ponzi scheme to collapse? What do you think it'll be, Rob, and when do you think it'll be? Do you have a crystal ball? You got 2 minutes here.
You know, I think it's really tough to say, and all I can say is, other than I know fundamentally, and there you go, talking about fundamentals again. I know that the actions that are being taken by monetary authorities will lead to a collapse, and I don't even say or suggest that I relish the collapse, because the day the collapse happens, I don't think any of us are gonna say thank you and relish those times. Tough times ahead, folks.
Tough times indeed. And how do we sum this up with 90 seconds left in the broadcast? I guess it's best to say, Rory, I thank you so much for your time and your daily contributions to SGT Report. I know that you did a lot of show prep here for the radio show today, and we had some internet connection issues with you. Rob, I can't thank you enough for your time too. You're such a generous person when it comes to your time. And do you have any final words for this audience that might be listening in? Anyone who has precious metals and feels beat up, and anybody who maybe doesn't have any?
Well, you know what? There's no such thing as a bad day to buy physical precious metal, and you can never have too much physical precious metal. And all I can say to everybody who's listening to this, if you can do yourself one favor, buy more physical precious metal. And when you think you have too much, plug your nose and buy more.
Well said. And you guys can check out Rob Kirby at kirbyanalytics.com. He is our Canadian friend. He's smart enough not to live in this country in the face of tyranny, but he is helping us wage a battle against tyranny, a battle for truth. Look, folks, we're going to say our goodbyes now. Visit us over at SGT Report, where we have a very active comment section. We'd love to have you there. It's really a very active forum for an exchange of ideas. Thanks for joining us.